If you're a passive investor, have you ever wondered the best way to track your portfolio is? Is it investing in a fancy online portal and getting all the bells and whistles? Or is it just keeping a simple spreadsheet? Well, today we are going to tackle that question in our presentation, our Passive Investing Made Simple Bootcamp, Track What Matters, how to build a smart investment tracker that actually aligns with your investment goals. Now, if we haven't met before, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. And I'm excited that you're joining me today for our Passive Investing Made Simple Bootcamp because maybe you've tried investing passively before, but couldn't quite get comfortable making the investment, or you actually have invested in a passive deal before and realize, oops, I made a mistake. I got into an investment that did not align with my goals, or you are a seasoned passive investor and you simply want to sharpen your skills. If that's you, you are in the right place. Now, just a little bit about me before we get started. I walk the talk here. I've actually been investing in real estate since 2002 and have scaled over 800 million in active real estate holdings, including over 6,500 residential units, express car washes, as well as self-storage units. I've flipped over 5 million in residential real estate. I've also scaled my passive real estate portfolio, like you, probably what you're doing here. And in my role as Director of Investor Education at passiveinvesting.com, I help you put all of what I've learned in my journey into use and to build and scale in your own portfolio. I've also documented that journey in my book, Money for Tomorrow: How to Build and Protect Generational Wealth. Now, everything that I've done since 2002 in real estate, and even in my financial journey before that, has been in service of one thing. How can I get 100% control and choice on how to spend my time? And so all of those numbers that we just covered is in service for one goal, which is I want to have freedom and choice on how I spend my time. Whether I am spending my time here with you to help you level up and empower you to reach your financial goals, or if it's spending time with my family and friends, traveling the world, and just having life experiences. Again, if you are like me, this is something that you probably highly value, and we can help you do that here at passiveinvesting.com, whether it's through our equity assets like multifamily, express car washes, or through our cash flow, debt flow assets like our real estate debt fund. We can help you scale that cash flow and equity that you desire. Now, before we move forward, I always like leaving people my contact information. And if you're watching on video, you have my contact information in the first slide as far as my email, but I also invite you to visit passiveinvestingwithwhitney.com if you want priority access to our open deals, want to schedule a one-on-one call with me so you and I can talk about your investing goals. Again, make sure to visit passiveinvestingwithwhitney.com. Now, as always, we are going to talk about a lot of tips and tools around passive investing. Today, I'm going to show you one of my favorite ways to track your investments. Now, nothing here can be construed as financial, legal, or tax advice. Make sure that you are taking all of this education and putting it to visiting or meeting with your own team, your investment team, before making any investment decision and learning the best ways to put it to use for yourself. Now, let's kick it off here. You've invested in a passive deal, but is your portfolio actually doing what you need it to do? This is a huge question. A lot of passive investors, when they start transitioning into the space, and probably you too in your journey, you're trying to figure out what are all the different skills that you need to learn how to do. I need to learn how to set my goals, maybe create an investor thesis. I need to figure out how to perform due diligence on the operator, the market, and the deal. Great, I found a deal. I love it. I'm going to invest in it. But do you know how you're tracking it? How all your different investments are going to play together with each other as passive investments, but also in the larger breadth of your portfolio? Maybe you still have stocks, bonds, and mutual fund holdings. Maybe you got some CDs. Maybe you have some other note investments that you do. Okay. So again, the fundamental question is, do you know what you need your portfolio to do it, and can you track it appropriately? Because when you as a passive investor don't learn how to track appropriately, you might be unintendedly over allocated in some spots. Maybe you become inadvertently over concentrated in too much capital in similar like investments. I can tell you from the past 3 years with my conversation with passive investors, I've seen that part right there happen quite a bit. A lot of people were over allocated into value add equity assets, not understanding that when the market shifts, that there might be some risk exposure there that they didn't intend to take. Maybe you're over allocated into investments that have little or to no cash flow. Maybe you're in multiple deals that where the cash flow either was, dependent upon the market performing really well, and then when the market hits a bump in the road, that cash flow gets compressed or evaporates altogether. Maybe you are in over allocated in parts of your portfolio that are certain are dependent on the market performing one way, and when the market changes, those assets are going to be challenged. Okay, maybe you're in struggling deals right now that are actually underperforming to expectations. Here's the thing: we cannot improve what we cannot see. Meaning, if you're not tracking the numbers, or you're not tracking your portfolio, there's no way we can make better decisions. So let's dive into this a little bit further. All right, I hit too many buttons on my screen. Okay, a lot of people, maybe you, are trying to build your own tracker, investment tracker. Or maybe you're just like, hey, Whitney, I'm not a spreadsheet person. I'm going to invest in X online tool. I've heard it's amazing. Or I got a special code to where it's free for 3 months. I'm going to upload all my data in there. I'm going to allow it to tell me how my portfolio is doing. But here's the thing: the typical investment tracker that most people either build or pay for is either excessively complex, meaning there's too much data that's being thrown at the person that they really can't get clear on how the performance of their portfolio actually is tailored to their goals or even to future due diligence of future deals. Okay, it doesn't actually offer strategic insights. Yeah, you might know how your internal rate of return is performing across multiple investments after 5 years, but that raw data doesn't really connect you to your investment thesis or into investment goals. Is it actually helping you achieve what you need in your portfolio right now, or make better decisions for investments you're going to make over the next 6 months? Okay, another thing that I see with the typical investment tracker that my coaching clients share with me and other investors is that there's just allocation blind spots. So they have all of their investments tracked, they have all the major you know variables being tracked, but they don't know how everything is allocated. They don't see the over allocation into different parts of the asset class or different parts of the market or different risk profiles. And so they become incredibly imbalanced in their asset allocation. And therefore, kind of all of this leads into the last piece. When you have a tracker that is really complex or not set up appropriately for you, then you become very disconnected from your investing goals. Okay, so you really can't measure what it is you're trying to actually answer. Okay, so we're going to solve that today, but I want to dive into this a little bit further because um, a lot of investors will push back on me. You may be one of them. You might go, well, Whitney, I don't need to put together another spreadsheet. I have all my operators in their portfolios. I can see how my different investments are performing. Again, what we need is that overarching dashboard, because just by having an operator portal too, that portal is only showing the investments with that operator, maybe only focus on that individual deal metric. It's only optimized for that operator's reporting needs, not for what you need across your whole portfolio. You don't get any cross-deal analysis, okay? And moreover, you don't get to see the different risks that are being taken across your entire portfolio. Whereas if we bring it back to you building your own spreadsheet, your own investment tracker, okay, we get to highlight all of your operators. Okay, what are those investments across all the operators? We get to see your overarching allocation across all of your passive investing deals across maybe all of your stocks, bonds, and mutual fund. Maybe you're holding some crypto too. Maybe you're holding cash. Maybe you have other controlled asset. Maybe you own your own single family rentals or short terms. We get to see all of that together. It's customized to your investing goals. And now you get to make strategy level decisions, and you get to see clear visibility of your risk exposure. And I'm going to show you how to do that. So first, when we're looking to lay out our investment tracker, all right, we want to make sure we have clear data points that actually will drive decisions. It is great to track all the fancy buzzwords that we see: preferred return, internal rate of return, equity multiple, total return to date. That's awesome. I actually put that in the last box because we actually want to back it up and track the asset information. All right, the property name, market location, the operating partner, right, the actual asset class, right, because those are going to inform who we're investing with, what market we're investing in, and what asset class we're in. Okay, 3 of the 5 ways we can actually diversify our portfolio. Our next box is that we're actually going to track all those metrics that kind of feed into the risk alignment, right? What kind of risk tier are we in? Are we in debt? Are we in equity? Okay, what kind of goal alignment do we have? Is it getting you cash preservation or capital preservation, cash flow, equity growth, tax benefits? Okay, maybe multiple of those. Okay, what's your liquidity timeline? All right, how long are you invested in? 2, 3 years, 5 to 7 years, 10 years, or is it a perpetual hold? All right, and then we're going to do our tier 1, tier 2, tier 3 risk assessment, and I'll show you that here in a minute. Then we want to look at those numbers that are very important to us, our allocation exposure. Okay, when you invest in that one deal, what's the total percentage of your portfolio that's invested? How much money did you actually put into that deal? Concentration by operator. Okay, this is where we're going to start doing some fun level analysis, right? Like, how much money do we actually have invested, or percentage of our portfolio we actually have invested with that particular operator in that particular market? Okay, then we get to do all the fun stuff on the right hand side of the screen, right? The things that are all the online platforms tell us that we need to keep track of. Okay, but we do want to keep track of this. It's just not the first thing for us to keep track of when we're building an investment tracker. So performance metrics. What's the current status of the deal? Is it cash flowing? Is the distribution paused? Is there a capital call? Okay. Unfortunately, have you lost money with an operator? Okay. I have a couple deals in my portfolio that are going through litigation right now. And, though I want to keep track of all those different statuses. I also want to keep track of how much cash flow am I receiving from that asset. Okay, so if I'm expecting, say, $500 a month from that particular investment, how much am I getting? How much is deferred? Okay, the projected versus actual. And then I will also want to keep a column in there for capital events, right? As a passive investor, it's not a matter of if we're going to have a deal that struggles, it's a matter of when. So we need to make sure we've got a reserve set aside to, and plan in place in case that happens, and be able to track the additional capital we inject into a deal. Okay, maybe it's your own single family rental that you had to replace the sprinkler system on because the main line broke. Don't ask me, that is a personal thing right now, but that is capital that I had to inject into one of my single family rentals right now. Maybe it's a multifamily deal that you had to inject a little bit of capital into. We want to keep track of all those things. And then we're going to keep track of all those things you're going to find in the operating memorandum. Now, this looks really overwhelming, but when I show you the layout, you're going to be like, oh, Whitney, this is a one-time setup. Once I get this all set up, maybe it takes me 30 minutes to get this all set up. Now I can input all of my deals into here, and now I can make some clear decisions. And we're going to show you how to do that here in a minute. All right. So this is kind of what my basic tracker looks like. Okay, I took all those data points in here and I literally, started tracking. This is a mock file for you guys, but you know, number at the top, net worth. We're going to put in our net worth number, and then we're going to drop in all of those pieces that we mentioned on the previous slide in here, and then we're going to just track it. Now, I encourage you for a lot of these columns, keep like status of performance, keep it very bucketed, okay? Because when we start doing our cool analysis on this, the more concise and the more that we can put things into buckets rather than making random notes, we're actually going to be able to extract the data from. So things like our status of performance, our asset type, our risk tier, our operator name. We want to be very succinct and put these things into buckets. Okay, here's a broader view of that so you can see. All right. Now, the reason why we want to do this and put it in broad buckets is that this column, this row right here, we can actually put a filter on. Okay, you can actually select the row, you can go up and hit the little filtering hourglass in either Excel or in Google Sheets. But this, by putting it into this like neat little format, we get some easy filtering, right? Even if you never learn how to set up a pivot table, we can sort it by operator, the risk tier, the asset class, and instantly start seeing patterns and connections and concentrations. You can do simple calculations like summation, averages, okay? We have all that data in one standardized spreadsheet. Now, after we get the initial setup complete, it might take you 10, 15 minutes a month to update this. I have some of my investors that only update theirs once a quarter. Um, but we just want to do like periodic updates to it to make sure that our cash flow is tracking and that we're making notes when we're reading our investor updates, and we're making sure that we understand everything that's happening with that investment. Okay, that's our responsibility as a limited partner. And we get this single view clarity, right? We're not in some complex investor portal where we have multiple clicks in order to get into various reports, and then we have to figure out how to streamline all that information together. Okay. All right. So really what the tracking sheet will help you do is build that clarity before you build your portfolio. Okay. Data is only useful if it helps you drive better decisions. Again, we want to get focused on the investing, focused on the risk management, make sure that we're optimizing for whatever your goal need is. For me, it's cash flow, so I drop that in there. And then also for growth planning. Okay, now that what we just tackled there is just putting together the tracker, getting all of that data into one spreadsheet. Okay, why? Is because unless you're super organized, you might misplace the offering memorandum that you got electronically from the operator. So you want to have the name of the asset, who's operating, what was your original capital investment, what was the original pref, the IRR terms, all of that. You want that data in there, okay? So you can see it as a snapshot, right? Hopefully you're staying organized and we have those in separate files, but you don't have to rely on pulling the files all the time. You want it right there on one dashboard. Okay. So also when we have everything on one dashboard, we can start driving into particular data points and doing some analysis here. So we can start seeing, are you overexposed in certain areas? And where I see a lot of investors get overexposed with their portfolio is either in their operator concentration, geographic exposure, their risk tier balance, okay? Are they too heavy in a particular risk tier? Or another way to put that, position type, okay? And we've gone through different risk tiers here. Now, guys, this is not how I would consider the layout of the risk tiers, but this is just to show you one person might actually say, I want to have most of my portfolio balance in tier 2 income type investments, a slight, maybe 10% in the liquidity and only 22% in the growth. But when they look at their dashboard, it's actually telling them a very different story. All right. So how do we actually start getting at the different concentration? Now that we have the whole dashboard built, okay, we've got our different variables set up in the columns. We have all of our investments listed out in the rows. Okay. Our data is neat. It's organized. Now what do we do with it? How do we start making decisions off of this? Well, it's putting together a function called a pivot table. This is one of the simplest ways and most powerful ways to start looking at data connection. So I went ahead and gave you directions. Go ahead and take a screenshot because these directions apply whether you're in Excel or Google Sheets. Okay. But you're going to select your data. So all the rows of your data, including that top row with the name in it, the name of the column. You're going to go up to the top and you're going to say insert pivot table. Okay. Now a pop-up box should pop up and it's going to tell you, it's going to ask you, okay, great. Here's the data that we have pulled. Where do you want to pull it? Okay, so you can either put it in a new spreadsheet in that book, in Excel file or Google Sheets, or you can go down to the bottom, past all your rows and select a location, right? Then we got the pivot table window open. We got to start telling it the values. Okay, so for the row values, we want to pull those things that we want to look at, like the operator, the asset class. Okay, and then for the values, so that's going to be our y-axis. Our x-axis is going to be the value fields. Okay, we might drag in things like cash flow, investment amount. Okay, and we want to switch it to tell it that we want the summation of whatever value we put in there. I'm going to show you an example here. Okay, so this is a pivot table that I created to look at a particular risk exposure within the portfolio. So I selected my rows of data. I went in up to the top and I said, insert pivot table. Then I said row risk tier. Here's all my risk tiers. Okay. And then I said variable under my summation variables. I'm going to go back here to the screen. My value fields right here. I had it summate my investment amount, the percentage of my net worth, okay, the summation of current cash flow, summation of pause cash flow, and then a summation of any capital call. Now remember, this is just a dummy sheet that I created for this particular example. All right, and then now we start getting a clearer picture here. Now, I would take this risk exposure sheet, I would look at my investment thesis and go, huh, I actually wanted to have 80% or 60% of my portfolio allocated to cash flow, right? But I only have 10. I'm off. Whereas I've got majority of my portfolio allocated to controlled real estate or non-performing real estate or equity real estate. Huh. I actually wanted that to be a much lower allocation. Okay, so now we can start seeing our very varying levels in risk exposure. Now we can actually create pivot tables for operator exposure. Okay, this is an example of that. We can look at status of performance. All right, how much of your portfolio is performing versus non-performing. Okay. Now, with all this data, you can go crazy on pivot tables. And the cool thing is, when you have your dashboard built, you have your basic pivot tables. I would suggest pivot tables of 3, maybe 4, variables that you want to keep track of. Okay. You can just insert a row into your table above when you make a new investment, and you can see how it's going to affect your allocation. Okay. And this is how we're going to, keep track of our balancing efforts. Are we staying balanced with our operator diversification? Or are we staying balanced with our risk tier diversification? Are we staying balanced with our lifestyle goal alignment? This is something that I find quite often with the investors I work with, is that They are super heavily allocated on controlled assets where the things that they're managing on their own. And they're like, I don't have the time that I really want. Well, great. When we look at your portfolio, majority of your portfolio is allocated towards controlled active investing. Of course, that would make sense. Okay. None of these benchmarks are rigid rules, rather suggestions, me helping you understand how you can take a look at your portfolio. Because there's a huge benefit to clarity, right? Okay, I pulled this data from investors that I work with personally. Okay, when I help them build out this table and make it super clear, okay, we actually see like almost a 30% lift in immediate clarification and efficiency in their portfolio tracking. I mean, it just immediate right off the ground. Most of those investors, when they look at their portfolio tracking and also combine that with all the goals that they're setting in their investor thesis, they're like, ooh, I now know what to do. I can invest with confidence. And then we actually are able to significantly reduce the anxiety when they actually have clarity on what it is they want to do and they know how to track it. Okay, with proper tracking, we eliminate all that guesswork and investment decision fatigue, and you can actually move forward with confidence. All right, guys, that wraps up today's session. If you want further help with your investing goals, if you want to run through after you set up your own table and your pivot tables, if you want eyes on that, join me in the Passive Investing Club. Go to passiveinvestingwithwhitney.com and remember to register there. There you get priority access to our deals. You can schedule a one-on-one call with me, and we can take a look at how we can help you meet those goals.